Hey, beautiful traders, welcome back to my channel. My name is Desmond Samuel, and I'm back with yet another episode of our weekly Forex Forecast. Now, if you're coming across the channel for the first time, and you're probably wondering what this is about. So, this is a segment of my channel that I've actually put aside to come in on here every single weekend to give you guys the best trading opportunities for the weeks ahead, and then also take you guys on a quick review of our recent trading activities across the board for our FX channel. All right, so without wasting any much time, and I urge you guys to always stick true to the end because I like to leave the best pair for the absolute last. And then I'd like to say a very big thank you to you guys that took me to 1,200 subscribers. Literally, I'm just a few more subs away from hitting 1,300 subscribers, and that wouldn't have been possible if you guys were not on my side. So thank you so much, guys, for speed. Thank you so much for the support. So let's get things rolling. And also, I urge you to click on that subscribe button, turn on the bell icon, so that when next I come on here to let you guys know what the best pairs to trade is, you will not be amongst the last people to see it. You'll be amongst the very first few. Okay, so without wasting any much time, the first pair on my list now is called the pound sterling. So if you look closely here from our recent videos, I have been highlighting this guy to the upside for quite some time now, and the market has just played according to our own projection, and then it's currently sitting at a very critical demand level here. And let me just show you guys how this pair looks on the weekly time frame. So we have, for some reason, failed to stay bearish on this guy as far as the weekly time frame is concerned. Instead, we are starting to shift momentum to the upside. And let's just see how this looks on a monthly time frame. So on a monthly time frame, this is how things look here. We have the overall flow for a very long time has been south to the downside. And as things stand now, we are actually starting to point to the upside now. We will have this trend line here, this descending trend line that's been broken out here, and we can actually see from this swing high, we can actually go ahead to connect the dots here. You can see that from this point, we actually broke out of this downtrend line. I know, starting to point to the upside. All right. So scaling down to the weekly time frame, I'm just trying to walk you guys through why I'm very confident that this pair is about to go bullish. All right, it's actually shifting to the bullish side of things. Plotting our own trend line from this very point here, from this blue bar here. I don't know. So from this very point here, I think we actually have to go back to the monthly time frame. Okay, so plotting our trend line from this very point here, from this very level, this point here, you can also see for a fact that the market is actually starting to reverse temporarily to the upside. So from here to here also, you can see that we actually broke out of this trend line here. Okay, so this was like a breakout retest continuation event here. So once we scroll on to the weekly time frame, this is how things look. So we have a decent criteria as to why I'm actually very, very confident in this bullish setup. So we have like a breakout of this downward trend and the retest, and then we had a decent bounce from there. So the market just came back to retest this demand level that it had created some time back, which I actually spoke to you guys about. So on the daily time frame here, this is how things look. So we have a breakout, a retest. This was the first retest here that created a demand level. And then how do you know that a demand level has been created? Simple. You actually look at how the market reacts off of that level. So in this case, we actually went ahead to put in a daily bullish engulfing candle that is a decent bounce off of here. So this shows that this place has momentum, and we have a lot of buy order stock here. So the market will always come back to test demand level before continuing in the initial direction. So in this case, I'm just gonna go ahead and get rid of this downtrend here. So as things stand here, I'm not in this trade at the moment. I urge you guys to just be patient. We're actually starting to see some form of slow down here and a build up in momentum. So whenever you're trying to break down a pair and then you see something like this happen where how the market just start to squeeze into a very tight corner here, anticipate a big move. All right, so we could easily be putting a bullish engulfing candle here, or easily break below here with an engulfing candle. Either way, the breakout is always huge. Okay, whenever you have this kind of tight consolidation here at a corner, the breakout is always huge. So in this case here now, the reason as to why I'm not exactly in this trade now is because it hasn't given me any confirmations yet, although every single thing is lined up perfectly, but I need to see that decent bounce. The same way I had this bounce here, and then also, like I always tell you guys, one way to know how a pair would always pull back is by studying the past pullbacks. All right, so you can see that the market came on here and created this demand level and then bolted from there, then came back again to retest it. So likewise, this is exactly what will most likely happen here, because price action always indicates what the market will do in the future. So as you can see here, we'll have this distant bounce here, and then what I'm actually looking at for is something similar. Okay, I'm not here to reinvent anything. It's always the same old stuff. And I need to see us give a decent bullish engulfing bounce off of this level. Let me be sure that this level is very solid. Then I can scale down to my 4-hour time frame and find like decent, pullbacks that I can actually knock this guy up to the upside. You can see how this one looked. They came on here and then it bounced off of here. So entries could have been here, there's stops below here, and then you actually ride this guy to the upside. So same thing is going to happen here, or rather, same thing has to happen here before we actually go ahead to execute this trade. So in my opinion, I'm actually waiting to see a bullish engulfing candle. All right. Already we are starting to shift to the upside here, where you can see the market is just stalling around this level. It's slowing down around this level. So I'm actually waiting for a decent bounce. And once I see that engulfing daily candle, I'll be in this trade, or I'll be here also to let you guys know, which is why I urge you guys to subscribe to this channel and then turn on the bell icon, so that when I come on here to alert you guys that GBPUSD is ready to go to the upside, or it has validated our setup here, you'll be amongst the very first few to see it, and then you can react fast. Okay, because in making money, speed is very important. So we need to see that daily engulfing candlestick pattern from around here for the pound. So once that is said and done here, we have space. So my first take profit will always be at the 100% retracement point. So what do I mean by this? So if you're familiar with Fibonacci, and you guys know me that I do actually nothing as far as the market is concerned. I always go everywhere with my Fibonacci. So I have from swing low to swing high here, and then this is the pullback. So it's typically 4 moves here. So from swing low to swing high, and then so this is the inception here, the move, the turning point, the pause, and then continuation. So this is like A, B, C, D. So the move starts from A, goes to B, pauses at C, and then finishes off at D. And most times it extends to E here, which is this negative extension point here. So if the market does not turn or pause here, it would always pause and come for a pullback around the 0.27, the negative 0.27, which happens to be an extension point. All right. So now next thing we target for the pound sterling as far as technicals is concerned is this high here. Once we can blow through this high, we have space all the way here. So roughly we have about 1,100 pips to go, all right, on this guy here. So this is like trade for the rest of the quarter. If you can catch this trade properly, you're good to go. You make that Christmas money with me, I guarantee you. All right. So the next pair now on my list would be the pound card. Now I'm not talking about the euro dollar because it is not giving me what I want at the moment. I'll come back to it. Believe me. I will come back to you. So for the pound card, I called out the pound card in a recent video. If you doubt me, always go back and check my previous videos so they can learn 1 or 2 things there as well. So all I could see here was a range breakout. Demand level was formed and the market had to come back. It's always the exact same thing, guys. I'm not here to reinvent anything or to try and give you guys something new. It's the exact same thing that works. Consistency in this game is very important. I don't come here to show you guys anything new. Okay, what has worked for me for the past 4 years is what I come here to show you guys practically for free. So what I see here is, one, we had like a decent bounce here. This is an engulfing candle. This is the sign that we have lots of buy orders here. So I see no reason as to why I would not want to buy from here. It's just common sense. All right. So breakout, retest, continuation, then pullback. Okay, so this is a clean textbook demand level trade here. So it was quite easy for me to see from swing low to swing high here. This was the immediate point, okay, to play with. And then this is also the 3 confluence zone where you have the demand level here, you have the Fibonacci, and you have the trend line bounce. So 3 things coming together in your favor is quite magical. All right, so this is one of those trades that you do not want to miss. So however, this trade was taken, and currently we are actually running risk free on this pair. So if you actually took this trade with us, you can go ahead and then lock in profit. Just make sure that you shift your stop losses to break even. That is, you move your stop losses to break even, and then you allow the market work for you. So our first target is obviously always the recent high. So once this high is breached, we have space to this point, and then subsequently, if we do actually continue higher, if we do actually continue higher, we have enough space to the upside. But this this will be left for later. I'll always come back here to let you guys know how you can navigate your way from here, from this point to this point here. All right. So because the market likes to move from one zone to the next zone, from demand level to supply level. That's exactly how the market moves. So next panel on my list would be, I don't have any business with the USD at the moment. It is not enticing. It's not entirely enticing. It's just bridging levels that's pissing me off. So next pair now will be the Aussie dollar AUD USD. So let's look at it from a monthly time frame perspective and see how this guy looks. Okay, so this is how things look as far as AUD USD is concerned. So the overall time frame has been bearish for a while now. But that doesn't mean that we cannot be taking minor pullbacks, buy trades here and there, especially with the dollar showing signs of weakness in recent times. So what I see here is we have this descending trend line, obviously, to work with. So this is how things look. So as it stands here, we are quite far from the outer trend line here. So I'm just going to go ahead and leave it there for future purpose, or I'll just get rid of it since it's not needed at the moment. So I'm just going to look closely, like which is the most immediate trend that we can work with. In that case, is this guy here. So this is it here for the Aussie dollar. So I'm just going to go ahead and plus this guy from swing low, from swing higher, connect the two outermost points and extend it into the future. So you can see that the market is just playing around this whole zone here, almost like a touch of a trend line. Okay, however, we began to see a shift in the momentum to the upside, in the sense that this guy started to put in this form of a inverted head and shoulders pattern to the upside. We have the head, shoulder here, and then a reversal. So this could potentially be a medium term reversal to the upside as far as technical analysis is concerned. So on the weekly time frame here, we have a descent trend on a hands here, and then demand level that has held in the past. You can see that this guy reverses market at this point here. This guy at this point here, 2023 market was stuck here. All right, so this is quite a very, very solid demand level in my own opinion. So in that case here, and then also I think we do have a trend line to work with. Let me see if I do have a trend line. I don't think I have a trend line to work at the moment. So the market is actually seated at a very critical level here, which is also a demand level. Okay, so long story short here, I'm actually watching this guy closely because the market has actually reacted to this demand level that was at this point here, which also acted as supply. And you guys know, like I always tell you guys that these levels are actually intermediary levels. That is, one can act as supply and demand at the exact same time, depending on the time. All right, so long story short, for AUD USD here, I still need to see a bounce. I'm not convinced with this by this pattern I'm seeing here, because we could easily dip back down. Okay, so what I need to see is very, very simple. Let me check something real quick. Let me see if there's something I can work with here. So let me try and connect this trend line here. So from this downwards one to the one of, okay, so even if you're buying this pair now, you need to be conscious of the fact that there's a trend line acting up somewhere around here. Okay, so just be mindful of yourself as you take this trade. But for me personally, I like to see maybe one more bullish engulfing daily candle close. Okay, once I see that engulfing candle close, I'll be very confident to scale down to my lower time frame, preferably the 4-hour time frame, to see how things look, and then I can then go ahead to execute at that point. Okay, so the market just came in and gave us a bullish pin bar, and it's starting to point to the upside. So as things look here, I don't have any trade as far as AUDUSD is concerned. In fact, we are still stuck under this trend line here. So ideally, what I need to see us do is break out of this, counter trend line. Once we break out of this counter trend line here, we have space to the upside. So my prime target for this guy was the recent high, and then subsequently 0.700, which happens to be a rounded figure where this blue bar is. So the next pair now on my list will be NZD USD. Also has a very, very a very, very similar setup. However, I'm still cautiously bullish on these guys, okay, because they have actually breached the demand level that I was actually talking about earlier. So these are things look from the weekly time frame as far as NZD US is concerned. Let me get rid of this guy here. So again, from the high time frame perspective, let's just see how things look. So on the monthly time frame, we have a decent, descending trend for some reason here. So this is a high, this is a low. Let's just call it what it is, downtrend. So this is a high, this is a lower high from here. So the market has come in to put in an equal low at this point here. So whenever the market puts in an equal low, best believe that it is most likely going to be like a double bottom and then a potential reversal to the upside or medium term pullback. So in this case here, once we now scale to the weekly time frame, you can see that we have a demand level that has acted as held in the past. In 2023 it held, in 2023 it held, at this point it held in 2024 January, and it is most likely going to hold at this point. That's why I'm confident to call this guy to the upside. And then as things look here, if you look closely, we have as higher lows here. So this low is higher from this previous low here. So this is like subsequent series of higher lows here. And you guys know that one of the characteristics of an uptrend is giving you a series of higher highs and higher lows. And in this case we have higher lows here. And then not only is it printing higher lows, but it has actually coming here to give us a double bottom neckline break and retest. So everything is pointing upwards, as far as this medium term trade is concerned. So as things stand here, I'm actually looking at this demand level carefully. So what I need to see is very, very simple. Obviously, we have three confluences on our side here. We have this trend line here, we have the trend, we have the Fibonacci, and then we have the demand level. So it's practically four things aligning in our favor. So what we need to see now is the market has actually come into a Fibonacci at the 0.600 region, and it has reacted off of that level. So what we have to see now is to scale down to the 4-hour time frame and then have like a counter trend line play. All right. So let's see how the market reacts around this level here. Actually, we have actually broken out of the counter trend line. Okay. So this is actually starting to point to the upside. Make no mistake. However, I'm still very, very very doubtful of this guy continuing higher. Okay. So we could have one more leg down to this point, maybe just like a minor pullback before actually go ahead and then start buying this guy. So my prime target for this guy will always be the recent high. Okay, at this point here. So plus or minus we have about 300 pips to play with. All right, so entries will be made at this point. Actually, let's watch and see how the Monday candle closes. If it closes like as a daily bearish engulfing candle, then this trade has to wait. However, if we do see one more engulfing candle just like this one again, one more engulfing candle up above here, entries are made and stocks are below here, then write this guy to the upside. That's just that for NZD USD. The next pair on my list. So gold is not having any decent opportunity at the moment. So that's I'm not really talking about gold for now. Gold is just playing around with your stop losses and your take profit. So you might as well just give it some time to decide. Ideally, what gold also have done was pull back to this point here, but instead it came here to give us a fake out here and then fold it back in. Okay, so this is still very, very tricky. So we could either, so as far as gold remains in this range, I have no business trading it. So we either break above here and then we head higher to my long-term target, which happens to be around $3,000 per ounce for gold, or we break below and then come in for that pullback. Either ways, I'm not interested in this guy here until I see a break out of this range. Okay, so as far as gold remains in this range here, it is coming for your stop losses. Believe me, I've seen this thing happen several times. Silver also same thing, quite indecisive, very, very sideways. So I'll just give these guys this pairs maybe another week or two. Let's see how they react. But for silver, my targets have been clear from the onset. $35 per ounce for silver is my target. All right, and we had an entry somewhere around here, and we've been playing this trend to the upside ever since I quartered this pair. Now, if it does me, you can always go back and check my previous videos. All right, they're always there. I document every single thing. The process is there live. So the next panel on my list should be the Aussie card. So Aussie card is the one that I actually took the trade last week. I took this trade this week rather, because I'm making this video on Saturday, but you're most likely gonna see this video later on. So I took this trade this week. It was a very, very simple trade to take. So like I said earlier, the market will always leave clues when it is going to reverse. Okay, it's just left for you to be very, very you have to pay attention to the details. Okay, so as you can see here, we have once again we have this sideways movement here, and we had some form of a descending trend where we started making a high here, a lower high, and then for some reason we came here, we failed to put in at least an equal low, instead we put in a higher low. So in this case here, this is more or less a trend pause or reversal to the upside. So as things stand here, I have every reason to be bullish on this guy. And if I try and connect the dots from here to here, you can see that the market even came in for that bounce before it actually went higher. So in that case, what we have here on a weekly time frame seems to be a bullish reversal to the upside. Okay, so pardon the so many lines. I just like to be very, very careful and then leave no stone unturned as far as this trading thing is concerned. So on the daily time frame here, this is how things do. We have series of higher lows and higher highs. Okay, so this is printing series of higher highs and higher lows here. So this is a low, this is a higher low here, series of higher lows here, and then higher high and then higher low from here. So the market came in here and then printed a double bottom at this point here, and then broke the neckline, came out to test, and then this is just that demand level play that I always talk about. So it's very, very simple. Well, it may not be simple for you, but for me, it's quite simple because I mean, like I said, I've been doing this for well over 4 years now. So we had a decent demand level play here, and then also that Fibonacci play. So from swing low to swing high here, we had the market bounce deep into this point here, and then also if you are taking this trade and then you lost it. So I'll be talking about this market manipulation thing and then something called liquidity sweep in our subsequent videos sometime in the future. You can just remind me to talk about it. So as far as AUDUSD is concerned, this trade is running risk free. It's actually close to our take profit here. So the target here is this high. Once this high gets taken out, we have space to the upside. All right. So as far as AUDUSD remains bullish or remains calm, this guy is actually going to keep going higher. Okay. So next pair now on my list is the S&P 500 still has not shown me any descent, and that's why I'm not talking about them much. Same thing with Nasdaq. It's just playing around the entire place. BTC on the other hand here has to give me that one more dip to the downside. I need to see BTC dip one more time. Okay, so where BTC is now is at a supply level here, as you can see. So this is where it is presently at the supply level. So what you need to see is the market give you that bearish engulfing candle, can knock it back down to $57,650 $1,000 per coin as far as BTC is concerned. So once we can get here, we can now start looking to punch it upside. However, since this market has come in here to put in some form of a double bottom here, it is quite tricky. Do you get me? Because we could easily blow from here, and then this was also an engulfing candle that engulfed 1 2, and then this is also a candlestick reversal pattern to the upside. So everything is just sideways as far as BTC is concerned. That's I'm not really fascinated about it. However, all things being equal here, we should actually dip lower to complete this neckline play here, and then also blow through to $72,000 per coin for BTC. Next pair now. So let's talk about the pairs that actually have the potential of making us money this Q4 and then subsequently Q1. So the first pair now will be the EURUJPY. So for EURUJPY, I'm cautiously bullish on this guy, but everything is pointing bullish as far as I'm concerned. So from the weekly time frame here, we have a decent play on our hands here. So this guy has been in an uptrend since like forever. Okay, it's always you see this pair has been bullish for a very, very, very long time. For over, I think for over 10 years. We have been bullish on this guy for over 10 years. Okay, so what we need to look out for here is simple. So we have a trend line that is currently holding this guy from blowing through the roof here. As you can see, we've come into demand levels here, and then this was even a Fibonacci play. So from swing low, most recent swing low to the swing high here, you can see that all the market did was coming to at 0.5 region here to play with. So what we need to see now is this trend line taken out. So and then this supply level and then this neckline. So this is everything is pointing bullish, no doubt. However, before you pull the trade, there must be certain criteria and certain clues that the market leaves for you. All right. So because I have actually broken down trading into two aspects, which is the trade analysis and then trade execution. So those two things have to come into agreement before you can actually go ahead and then execute your trade. So what I need to see on EURUJPY is very, very simple. A daily engulfing candle that breaks above this trend line. Once I see one engulfing candle break above here, pam, like this, that's it. All right. So once you one candle break and close above this trend line, entries will be made here, and then stops will be obviously below the structure because the market could easily rotate back down. However, as things stand, the market is playing around a neckline. So this is a head, shoulder, neckline. So the market is just playing around this neckline. So once I see that engulfing kind of break above here, I'll be very confident, and I'll be here to let you. JPY and Yen also has a very, very decent opportunity for us. Hey guys, welcome back to my screen. So now let's talk about the pound yen. So the pound yen also has a very decent opportunity. As far as the pound yen is concerned, everything is clear to the upside. Okay, there are no obstacles anymore as far as I'm concerned. So let's just see how things look on a higher time frame, weekly time frame in this case. So this is how things look. So we have been in an upward trajectory once again for a very long time. For a very long time, this market has been nothing but bullish. Okay, so in that case, we should only be looking for buying opportunities because of how weak the yen index is at the moment. So what we have here on our hands is the first touch of the trend, and second touch here, and upon each third touch was where the market broke out. Okay, so this was more or less a breakout and pullback to, and then to switch into a continuation to the upside. All right. So what we have here also is, if you can actually play from swing low to swing high here, the market came into this demand level and then balanced out properly and then bounced off of it with a bullish pin bar. You can see this weekly bullish pin bar. So this is a sign of a lot of buying orders and buying pressure here. And then the market even came out to give us a chart pattern to just further confirm that this guy is actually headed higher. So I see no reason as to why we should not blow through the roof right to 208, which is my first level target, and then subsequently all the way to 215 on the pound yen. Okay, so if you're not in this trade, what I would urge you to do, because I have stack of orders around trade already. I executed this trade I think sometime last week. So if you're not in this trade already, what I urge you to do is actually look out for a day engulfing candle. Look out for the Monday candle close. All right, so look out for Monday candle close, evening time, execute this trade, and then as you do so, please put your stocks below structure, put your stocks according to structure, and then allow the market work for you. So my first level target for the pound yen is 208 or 207 region, right about there. And then once we clear that space, we have a few more pips to 215. All right, so we have room to play with. And then the next pair on my list now would be, I think, oil isn't showing any signs of any decent opportunity yet. So let's talk about the USDJPY. So the reason as to why I have not executed USDJPY yet is because I see some form of I don't know. I just see a some form of obstacle on the way here. So ideally, we are already playing with a demand level here, which we have actually reacted to, and then we bounce off of here. However, when I now went on a higher time frame, then I plotted my trend, I could see that the market has this trend line here. So even if you're in this trend, I'm not saying that you're wrong. I'm just saying that as your initial, you have to be very mindful of yourself, because the market could easily reverse on you. However, I see a demand level that we can actually play with as well. So this is a demand level at this point here. So the market could easily come back down here to test this 147 region before actually continuing higher. Okay. However, if you look closely, the market also does like a continuation candlestick pattern in this case, which happens to be a bearish candle here followed by a pin bar and a bullish engulfing candle. So this is pointing upwards. However, should the market pull back here, it would most likely pull back into the demand level here. Just one deep to the downside before actually blow through the roof. However, long story short, I'm bullish across the board as far as the yen pairs are concerned. Okay, first level target for USDJPY is 162, and once we clear that space, we have room to 179. Okay, lots of it to the upside. And then also, you guys, I have done this before in the year 2023 January. I called the collapse of the Japanese yen, and then I'm here to do it again live and direct. So if you guys missed that opportunity, this is another opportunity for you guys to actually make money off of this pair. So the next pair on my list is the CHF JPY. This one is a lot quicker to move. It has actually fulfilled every single criteria, and it is well on its way to 180. Well clear. It is clear. All right. So what this guy just did was to come into demand levels here and then bounce off of it. So that bounce was decent, bounced followed by another engulfing candle here. So in that case, on a daily time frame perspective, let's see if we can have something to work with. Okay, so let's see if we have any short-term demand levels here to work with, lower time frame demand levels, and this happens to be it around this level here. So should this market pullback here, look out for this level, okay, at this point here. Okay, because this is also a Fibonacci play on lower time frame. This is the 4-hour time frame. So we are from swing to swing high. The market could easily pull back into 172. Once you see a decent pullback into 172, that is if you have not taken a trade already. Once you see a decent pullback into 172 here, wait for an engulfing candle like this, and then put your trade, and then obviously place your trades, and then put your stocks below structure somewhere down here. Okay, because the market could easily pull in deeper. Okay, it doesn't change our bias on this pair. And then also, should the market not even pull back here, just find a decent consolidation here, because market, these yen pairs don't pull back like the rest of your normal pairs, so the market could easily continue higher. So what you need to see here, just look for any consolidation somewhere around here and then execute your trade. Okay, so next step now is the Aussie JPY. So for Aussie JPY also has a very decent opportunity to the upside. All these pairs are headed higher as far as I'm concerned. Okay, so what these guys only did was just come into demand levels around here. Okay, and as things stand here, it's pointing bullish in this case. So we have a Fibonacci play from swing low to swing high here, which has lapped perfectly with our 0.618 region. So everything is pointing bullish as far as this guy is concerned. So let me see if we do have any trend lines that could hinder this trade from actually going higher. Let's go ahead and connect and see. So from swing low to swing high here. So we have in the future. So this will most likely pause around that 107 region. So whilst you're in this trade, be mindful. And if you get to this 107 point, and then for some reason the market seems to be stalling, just be calm, because we have another demand level to play with here. So just wait for the market to break above here. Once it breaks above and then pulls back into 103 region or around this level here, just wait for the market to just give you a decent sign to go in, and then you can also add to your positions. So as far as I'm concerned, I'm bullish on AUDJPY, CAD JPY, GBPUSD, and USDJPY. EURUSD as well has just one final criteria to fulfill before I actually hop on the trade. So one pair that I have not spoken about is CAD JPY. Let me see how this pair is behaving, if it is something that we can actually hop on as well. So CAD JPY also made me lots of money last time that this pair was trending. Let's see how things look. So from the higher time frame here, being the weekly time frame, let's see how this CAD JPY pair is actually setting up. Okay, so we have on our hands a decent trend to the upside, very decent trend to the upside. Okay, so I see no cause for concern yet on this pair. Actually, we have a very decent play here. Okay, so if you missed out on JPY and USDJPY early entry, what you should be expecting here on CAD JPY is very simple. Wait for the market to break above here. Okay, because this is also a demand level at this point. So what you need to see is allow the market break above here, give you that engulfing candle. You can see it's still playing around it. So what you need to see is just one daily engulfing candle break above here, pam. Then you make your entries. All right. So just watch out for how the Monday candlestick closes or Tuesday candlestick closes. Whichever candlestick gives you that engulfing pattern, you are very welcome to go and execute your trade, because everything is pointing north as far as we are concerned. This is an inverse head this pattern here, so this is the neckline. So wait for that engulfing candle break above here, and then you execute your trades. All right, so first level target is always around this 109, which is the 119 rather, which is the recent high. So if this guy is going to rally higher, I think we would most likely come into, let me see if we have any other level that we can most likely rally into. Let me see. Okay, so once the level clears that 119 region, we have our next level target being the 126. All right, so that's just that. So my prime target is 119, and then once we clear that level here, we have space all the way to 126. So that's exactly how you want to trade the market. The market moves from one level to the next level, and then it always goes back to the previous demand or supply level. And in this case here, the most recent supply level happens to be 119, and then subsequently we have 112. Okay, so we have room to the upside to play with. So let's talk about the Japanese yen. So the reason as to why I'm very confident in shorting the Japanese yen is because overall we are actually very bearish on this guy. So let's see how things look from the monthly time frame, not this one. Hold on, let me just dish out the trade. So it's called 6J. So on the Japanese yen, we are actually very bearish on this guy. On the monthly time frame, this is how things look. So let me show you guys the reason as to why I have been calling this guy bearish right from last year, 2023 January. Okay, so if you look at this pair closely here, let me just give you guys free game. I call this free game. So this is how things look. This is probably my last pair here. So we had like a decent head and shoulders pattern from here, and in this case, this is a massive chart pattern, which is a bearish indicator. All right. So and also there is a principle in trading that states that the total amount of pips accumulated in a range, that once the market breaks out, the market will always break out into the tune of those that amount of pips. All right. So let's say, for instance, that you're in a range and you've accumulated 1,000 pips. Once you break out, you have to break out to the tune of 1,000 pips. That is exactly how it moves. So if you now create it and then bring out your measuring tool here, you can see that the market has some more pips to the downside to play with. So we are not even up to halfway done with this entire move. So you're still early. Okay, so now we have a chart pattern here, which is the we had a this pattern, and the neckline got broken out here, and then the first pullback doesn't really do that much. And we're still playing around with the first pullback. So I'm still anticipating a bigger pullback that will come in. However, the market has to fall some more pips. All right, so everything is pointing south as far as this guy is concerned on the monthly time frame. So likewise on the weekly time frame here, we had like a chart pattern here. So this was a double top. So imagine having a double top in a downtrend. So this is heavy. This is steep. It's quite heavy. All right. So as things stand here, we actually came on here to create a supply level somewhere around here, and then we tested it once. And you guys know that the first pullback doesn't really do that much. The second pullback causes some form of damage, but not as much. The top pullback is what always collapses the market totally. And in this case, that's where we are now currently in the market. So my prime target for the yen index is somewhere around here, this low. So once we bridge this low here, we have space and room all the way to the downside, and then this guy could take maybe a year or two to play out. So you have time, don't worry. And that's why I urge you guys to once again subscribe to the channel and turn on the bell icon, so that when I come here, you see these pairs for yourself, you know when to execute them. All right, so I'm confidently calling out the Japanese yen collapse again. I've done it before in recent times. Last year I did it, and then the pair collapsed, and I'm here to let you guys know. So the only difference is that you guys get to benefit from it because you're seeing it early, because why you are also one of my subscribers. So also feel free to share these videos to everyone who you think could benefit from this. All right, so I'm calling out the yen pair collapse once again. We're actually collapsing on the yen pair, and my first level target is this low here. Once we clear that low here, we have space all the way to the downside to this point here. So I'm calling a massive collapse on the yen pair. So you guys are hearing it here for the first time. My name is Desmond Samuel, and I'm saying this for free, that the yen pair is about to collapse. The yen index is collapsing. Right? Japan is about to experience turmoil in their economy as we speak. So now I think the last pair on my list now is the dollar index. I think the dollar index is just the last thing to talk about. So for the dollar, I haven't really noticed any form of any volume play on this DXY at all. Instead, it has been very slow. As far as things stand here, this is even looking sideways. Okay, so we are still very sideways. We have actually come on here to test demand levels, and for some reason here we have actually failed to make a higher high. Instead we came on here to put in a lower high from the previous high. Then this is a sign of a shift in trend or momentum, as you guys might call it. So as things stand here, the only bar holding this guy here is this yellow bar right here. Okay, if this level gets breached, okay, and then for some reason we break above this channel, we could easily continue upwards. However, as things stand here, this is looking very weak as far as this yellow band and trend line is concerned here. So let's see if we have some trend line to play with. So from here to here, I do not see any trend lines to play with. Actually, we even came out to break out of the trend line here. So this is not the first time that I've actually put in something that we've broken above here, then I actually came back down. So I'm watching the dollar index closely. Watching it closely, we could even come up higher to maybe regions of around 104, which happens to be where this trend line and then this buyer. So actually here, the XY could be coming into 104 region here. So this is like the ideal supply level here to play, because the market has reversed from here, and then so it will most likely reverse from here as well. So that's just that for the XY as far as I'm concerned. So that's that for this episode of our weekly Forex Forecast. Let me know what you think in the comment section. Then feel free to like, share this video, and then also turn on the bell icon as you subscribe to my channel. And then see you guys